Good morning and welcome back to another video. It is August 6th, 2020, Thursday morning, 7:20 a.m. A little bit later than I usually do this. Have a lazy morning, what can I say? My boy's awake, so if you hear him in the background, forgive me. Let's go into the financial news for today. Americans are pouring cash stimulus checks into Bitcoin and gold, and that is pretty evident before I even read the article. If you look at the new all-time high for gold, historical all-time high of $2,000.70. And let me just tell you, folks, this is not the value of gold going up. This is the value of your dollar going down. An ounce of gold is an ounce of gold. It just takes more dollars to buy it now because your money is being devalued as your government, my government, continues to print it in the trillions to prop up the stock market and to prop up the economy. It isn't going to last forever, folks. Crypto's also doing quite nicely. We're looking like we're about to hit $12,000 Bitcoin. Ethereum holding nicely just under 400. XRP holding nicely at 30 cents. Anything else to report here? Nothing. VeChain rallying again, almost 2 cents again. But yeah, U.S. citizens seem to be taking a liking to Bitcoin and other cryptos. Two recent reports suggest. Yesterday, JP Morgan said younger investors were likely to choose Bitcoin as an investment over gold, while a report from last week stated Americans were investing their excess cash into crypto. Both developments suggest the same outcome. The cryptocurrency adoption and investing are rising in times of the economic uncertainty. Yep, bull run 2020? Let's see. Falling interest rates are tempting some Americans to forego safety and pour their savings into assets like stocks and Bitcoin. Noted Bloomberg, the move comes as traditional stores of value, such as low-interest bank accounts, are losing relevance as risky assets provide massive returns. The report said it's now standard advice in personal finance subreddits and Facebook groups to keep extra cash in high-yield savings accounts. However, rates on those have fallen steadily for the past year. What is high-yield saving account? Like what? I think the highest yield you can get is 1% now. It's pretty ridiculous. Ali and Marcus, the consumer arm of Goldman Sachs, gave investor rates of only 1 to 1.05% in July, respectively. They both have fallen from last year's 2% interest rate. See what I'm saying? After the U.S. Federal Reserve cut rates for the first time since 2008. But means a very small gain for most investors, one that's eaten up the ill effects of inflation. In contrast, assets like Bitcoin and gold gave returns of 55% and 29% last year, or this year, while Ethereum, Chainlink, and other DeFi tokens give a minimum of 300%. Still, the report suggests the upside is yet not fully realized. While Americans are confident about the market in the long run, 28% of surveyed respondents chose the stock market as their top choice for long-term investments. Only 18% of respondents chose cash investments such as savings accounts or CDs. Yeah, because they suck. Like they literally don't offset inflation. The interest you collect is so low on those things that at the rate they're printing money, you're still losing money. Younger ones go for crypto. JP Morgan's analyst Nicholas Panazzeloglu said in a report Wednesday that young investors are generally interested in alternative assets like Bitcoin, for sure. Older generations continue to use bonds as their favorite instrument for excess liquidity, evidenced by their strong buying during both June and July. Gold and Bitcoin ETFs have been experiencing strong inflows over the past 5 months as both old and young see the case for an alternative currency. However, that's not to say older generations are not warming up to Bitcoin. Earlier this year, investing legend Paul Tudor Jones said his $22 billion Tudor Investments firm holds over 1% of total assets in Bitcoin. So what's 1% of 22 billion? That's like, it's 220 million, I think. It's a lot of money. Okay. And up next, U.S. jobless claims fall to 1.1 million. Stock market rally hopes for second stimulus. The Dow Jones and S&P futures bounced off from their lows on the back of today's U.S. initials jobless claims data. The road ahead is full of obstacles and the path to recovery is going to be long and hard. The U.S. economy is likely going to continue to suffer as long as the jobless claims numbers remain as elevated as it is today. On that basis, the only answer for now is the second stimulus package. Great. U.S. jobless claims data. The U.S. initial jobless claims number was a lot more optimistic today when compared to the previous reading. The figure came in at 1.1 million against the forecast of 1.41 million. The continuing claims data also ticked lower and produced a reading of 1.61 million, while the forecast was 1.7 million. Dow Jones offs its low. Stock traders are hopeful that economic recovery is taking place and that the U.S. data is not going in the wrong direction as it has done over the past 2 weeks. If the U.S. jobs market continues to improve, it will also push the U.S. stock market higher. Having said that, Dow Jones isn't likely to pick up more steam, as stock traders want to see a number of readings before they can say definitely that the U.S. job market is back on a path to recovery. As the economic data was released, the S&P 500 spiked and the gold price moved lower. Gold acts as a safe haven. Traders favor the stock market when they feel confident, which leads to a decline in gold prices, which is not declining, as you can see. Second stimulus hope. There is also a lot of hope among stock investors about the second stimulus package. Great. Yeah. Keep inflating our stocks, which is currently being discussed in Washington. From the outset, it may seem that both Democrats and Republicans are far apart and that the second stimulus aid package may never see the light of day. However, if this was the case, the Dow Jones and the S&P 500 indices would not be trading where they are. The whole reason that we are seeing the S&P 500 back in the positive territory and also the S&P 500 futures inching closer to a record high is because this C19 stock market rally is led by stimulus support. Exactly. Traders know that a second stimulus package will be approved, and perhaps this could be the factor that took the kink out of the initial jobless claims data as well. By looking at the U.S. jobless claims data, it does appear that as we got to the end of July, there was some improvement in the labor market. The question now is whether this will translate into a strong jobs report due tomorrow. It is critical to know that the second regional shutdowns in the U.S. may not necessarily be reflected in tomorrow's job reports. Hence, the picture will remain somewhat unclear. Yep. What a load of crap, folks. I am not buying this. I don't enjoy seeing the stock market pumped with printed money, and it's not going to last forever. Be warned if you're invested in tech, if you're invested in a bunch of stocks, just be warned. I myself am not going back into the stock market until this election is over, and even then, it's going to really depend on who gets elected. We'll see. I'm pretty much almost out of the stock market and mostly into gold and crypto now, with the exception of a few things. But that's me. It's high risk, and I am not a financial advisor, so be warned. And with that, that's the news. Have a great day.